Bueno, a dar inicio.
Okay, let us start. Thank you again so much for your attendance on this webinar, which deals with the USDA's Export Credit Guarantee Program GSM-102. We'd like to express our appreciation to our speakers, Mr. Collin Bradley, an international trade specialist at USDA's Foreign Agricultural Service in Washington, D.C. Also, we have here Jeff Albanese, who's just back to the team and will be dealing and taking care of the Latin American market. We'd like to tell all attendants, all participants who want to listen to this presentation in Spanish to click on the little globe icon to deploy this feature, the interpretation feature. As far as the Q&A are concerned, at the end of Mr. Bradley's presentation, we're going to open the floor for Q&A, okay? Without much ado, I would like to again express my appreciation to all US Wheat team for putting together such an important webinar. Collin, you have the floor.
Same as Jeff, and please, all yours. Thank you.
Wonderful. Thank you so much. And it's wonderful to be here. I'm excited to talk about our GSM-102 program. Before I get started, just a little bit more about me. I've worked at USDA for 5 years now at various agencies and in different capacities. But I started working at the Foreign Agricultural Service back in 2020, right at the beginning of the COVID pandemic. And I just started with this credit programs division in November. So this has been a very exciting learning opportunity for me, and I'm excited to share this information with you all. I'll hand it over to Jeff very briefly for him to introduce himself. Jeff will be mostly in listening mode, but he has a lot of experience with this program and will probably be very helpful in the question and answer part. So Jeff, if you're able to, there you are.
Sure. Thank you, Collin, for the introduction. So my name is Jeff Albanese, and as Collin mentioned, I'll be covering the Latin America portfolio for the Credit Programs Division, which oversees the GSM-102 Export Credit Guarantee Program, as well as the Facility Guarantee Program. So I joined FAS in 2010 and have been with Credit Programs Division since about 2019. And as Collin mentioned, recently rejoined the division, coming back from another agency. So glad to be with you all today.
And this is Jeff's first week back, so we didn't want to throw him in the deep end and make him do this presentation, but he is, like I said, a wonderful resource. All right. With that said, I'm going to start sharing my screen. Okay. Apologies, everyone. I do have a multi monitor set. You can see the screen. Wonderful. Yes. Okay. So again, welcome everyone. This presentation is about the USDA Export Credit Guarantee Program. I'm going to back up a little bit and explain about our agency. So we're part of USDA and the Foreign Agricultural Service. So our broad mission overall is trade promotion for U.S. agricultural products and also formulation of trade policy. We have about 800 employees. Half of those are foreign service officers, so they're stationed in embassies around the world, like Bogota and Mexico City, all over the place. There are boots on the ground and work with importers like yourself and U.S. businesses and making those relations. The other half are civil servants like me, and we're based in Washington, D.C., providing support for our foreign service officers and also running programs like GSM-102, which we'll be talking about today. So GSM-102, here are some of the main program features for this program. So basically, GSM-102, it's a risk mitigation tool for U.S. exporters. I kind of like to think about it like insurance, essentially. The way it works is that the USDA, we step in and protect U.S. exporters and banks in the case where a foreign bank defaults on payment for a U.S. export. So getting a little more into the details, GSM-102 is based on letter of credit transactions. This is very key. We cover U.S. exports only if there is a letter of credit involved. And I'll talk a little bit more about the details of that process later. But basically, the letter of credit is issued by a foreign bank or foreign financial institution in favor of a U.S. exporter after a contract has been negotiated between a U.S. exporter and an importer of a U.S. agricultural product. So the terms of this, we have credit lengths up to 18 months, but we also have tenors that are shorter, so 6-month, 12-month repayment opportunities. Again, our program is mostly emerging market focused, and we have many eligible destination countries in Latin America, which I have a full slide on later. And again, lastly, we're kind of like an insurance program. So we cover 98% of the value of a US exporter or of a US export in case of default. So a little more about our program. So again, we mostly work in emerging markets. All the countries undergo a risk assessment to determine whether they're eligible or not as a destination. We also have a separate process for determining whether countries are banking eligible. So there's a little difference there. Not every country is allowed to have banks there, again, based on risk. But what's nice about the program is that it is regional. So for example, if you want to finance an import of US wheat, for example, you don't necessarily have to use a bank in your home country. You can use it anywhere in the Latin America region. So for example, if you're in Mexico, you could use a Costa Rican bank to fund a transaction. And again, I have slides later that specifically outline which banks are eligible and which are not eligible. In addition to that, we also have a wide range of eligible commodities that are covered in our program. Wheat is obviously covered, but we're not just about bulk commodities. We also can cover other products, intermediate goods, and high value products as well, as long as they meet the requirement that they're produced in the USA. So here's where I go into a little bit more detail about how a transaction under GSM-102 would work. So the first step is that, excuse me, the U.S. exporter establishes that contract with a buyer and applies for the guarantee. So we are a more export-driven program, and it's the exporter who has to file the paperwork with us and pay a guarantee fee, which is kind of like an insurance premium to us. So that's the first step, is establishing that sales contract. The next thing is that an importer, you would obtain an irrevocable letter of credit from an approved foreign bank to cover a sale of the transaction. The terms, the fees that you might pay for that letter of credit and the interest rates that you might pay on the credit that you receive, USDA isn't involved in that part of the transaction. We leave that generally to the private market, although we, because of the terms of our program, there's a lot of room for you to negotiate potentially better interest rates or better repayment terms. So getting back to the process, so again, the sales contract is approved between the two parties. The exporter has applied for the guarantee. There's a letter of credit. At this point, the U.S. exporter has the option to assign the guarantee to a U.S. bank. And so what that means is that the exporter can get paid right up front. And so they have improved cash flow for their business. And then at that point, it's the U.S. bank that needs to be repaid. So the next step then is the goods are shipped under the LC terms, and the transaction of the goods is completed. And at this point, hopefully everything goes well. Again, it's the foreign bank that needs to repay the US bank based on the terms that were agreed to at the beginning of the process. If all goes well, then USDA doesn't need to get involved and everyone gets repaid on time. Again, in the case that doesn't, though, USDA can step in and provide and can repay up to 98% of that shipment value. And then as part of this too, the foreign bank, like I said, owes the US bank repayment, but you also as an importer will need to repay your bank, obviously, for the credit that they extend you. And again, you're going to work on that with your own bank, the repayment terms and whatever fees that they may charge. So speaking of fees, how much does it take, or how much does it cost to participate in GSM-102? Well, the only fee that USDA charges is the guarantee fee paid by the US exporter. Again, that acts like an insurance premium for them so that they know that they're going to get paid. Other costs associated with this, like I said, are whatever charges that the foreign bank might charge for a letter of credit and those financing costs. Again, I want to make it very clear the USDA does not charge a fee for importers to participate in the process of this. It's all the costs that you might incur are based with the foreign bank. And again, we encourage negotiation with these banks and to shop around too. Like I said, there are many banks in the Latin America region that are eager to do business, and especially under this program. So you have opportunities to shop around for different interest rates. And I'll just add to kind of give us a sense of the size and scope of our program. We cover about $5 billion annually in transactions. There are limits for each region. Right now, for this year, we just announced our second tranche of funds. So in total, there's $3.2 billion worth of guarantee for the Latin America region at this time. And I'm not sure how much of that is already used up, but needless to say, there's still billions of dollars this year that could be used for this program. So how, as an importer, would someone get started with this? Well, the first thing that you would want to do is talk with the US seller that you're working with and make sure that they're registered in GSM. It's free to get registered in our system, but it does take a few steps. And some of those we don't control at USDA. So we can't necessarily expedite that if there are issues. So because this is the longest part of the process, this is really the most, you want to get this done first because in case there are time sensitive issues, you can't just do this in a week. So assuming that the US seller that you're working with is registered under GSM-102, and I know our colleagues at US Suite are very proactive in talking with US exporters about that. Like I said, then you would negotiate the sales contract with the seller and work with the local bank to get that letter of credit. Like I talked about several times before, we have approved banks, foreign banks do have to be approved to participate in our program. We have many banks currently participating, but if you have good relationships with the bank that you're currently working with and you don't see them on the list that I have later in this presentation, we are always looking to add additional banks. And I have a slide next about the requirements for them. But yeah, feel free to send them our information and we can walk them through that application process. And like I said, there's no application for you all to participate in GSM 102. No application and no fees. Though your bank will obviously have some sort of credit check to make sure that they want to work with you. So like I said, this slide, I won't go through in detail, but this is just the instructions. If the bank that you work with is not in our program, this is just the list of documents that they would need to submit to us for us to review and make sure that they're able to participate in GSM 102. It's pretty straightforward stuff, audits, organizational structure, contact information. It's things that are pretty readily available. We try not to make it too onerous to participate. So here are the slides for eligible destinations in Latin America. See, these are all the countries that can import under this program. You can see that it's very extensive and covers most of the region with a few exceptions. I won't name every single country here, but you have these slides as a reference. And we also have a website that has this information that is kept up to date. Oh, and it just automatically took me to the list of foreign financial institutions in Latin America. There's a second slide on this as well that lists them all out. But needless to say, we have about 56 approved, currently approved banks in Latin America that you could work with. And again, they span many different countries. I know we have people on the call from Chile today, Colombia. So between those two, it's 9 right there. On the next slide, you can see we have many others, many in Panama, Guatemala, Paraguay, so all over the region. And again, this list can change, so do check the website. And we're always looking for more banks to participate. So this slide goes over the different benefits that each of the players in this transaction can experience by working in GSM-102. Again, for the U.S. exporter, the benefits are obvious of that this makes their transactions safer. They can access foreign markets more easily. And they have that cash liquidity if they choose to assign this guarantee to a U.S. financial institution. For the U.S. banks, there's, they have expanded credit lines. They have different abilities to lend under this program. And again, USDA, we're taking most of the risk on this. So this is a nice mechanism for them. For foreign banks, there's access to US dollars, which can be very useful and is a great incentive to participate in this program. And again, the benefits also are the repayment lengths, again, up to 18 months. As I mentioned, those benefits that the foreign banks get are things that you can use to negotiate better rates and terms for your imports. Again, all of the terms that the bank gets are transparent, so that you can see that up front and use that as a negotiation tool. So in the next few slides, I just have some data about our program. I do come from a data shop in a previous career, so I like to look at numbers. But basically for last year, our top markets for wheat in particular were Mexico, Colombia, Honduras, Dominican Republic, and Ecuador. And we covered about $300 million in wheat alone during that year. So this is a big program, and we have a lot of money available. Again, similar numbers about wheat, just showing, again, about $300 million worth of exports from the US were covered, and about 750,000 metric tons. And while this is a US wheat presentation, we do, like I said, cover many different commodities. And this just gives you an idea of the breakdown of the different commodities that we covered last year. So you can see a lot of corn and soybean products, but wheat is up there at number 4. And again, if you have a question about an eligible commodity, we have the full list on our website that you can look at and see if you're interested in some other products, whether that's covered or not. So the next slide I like to include, because this is one of our success stories that we had in the past few years. And Jeff was around for this, well, I wasn't, so I might have him hop online if I miss any of the points in this one. But again, we don't always have to work with super large businesses. Sometimes we're working with small businesses. And this was the case in Venezuela. The program since 2019 has been very slow in Venezuela, and US exports have been down there for some obvious reasons, but it is an eligible destination country. So through some of the work of my colleagues here, we were able to help a US exporter who wanted to buy or was selling apples. The exporter needed some risk mitigation tools for this transaction, and the importer needed some credit to make the purchase. This was a small grocery store that was buying these apples. So again, through some of the work and because of the GSM-102 program, they were able to work with an eligible bank in the region, and they had their first sale under this program in 2019. And since then, they've had recurring purchases under GSM-102. So we like to see that sustained business, and we're happy that it's still going on today. So this slide is just a summary slide of some of the key things that sometimes people miss or don't understand about our program. Again, we're not only about bulk commodities, also intermediate and processed foods are covered under our program. Fruit, veggies, flour, all that sort of stuff, as long as it's produced in the US. Something else, there's no minimum dollar value for transactions. You know, we can cover things a few $1,000s, anything like that. You don't have to buy a whole shipload of anything for us to do business with you. And similar to that, we're not just for large companies. Of course, we work with businesses of all size, large, small, and medium. And then finally, again, GSM-102, we're not the ones charging interest. The only fee that we have is the guarantee fee. And through our program, the fees that you do have to pay, you have a lot of bargaining power to get lower rates and credit. So I know I went through that a little fast, but those were all the slides that I have besides some of these links. Again, you'll get this presentation if you haven't already, but again, the eligible commodity list is very important, approved banks, all of these things are very useful tools. So with that, that's the end of my presentation, but I'm happy to take questions at this time.
Thank you very much, Collin. Very interesting presentation. I think we have a couple of questions here. Jeff already answered to Julian Londoño regarding the GSM allocation. Almost 700,000 metric tons of wheat is coming under this program to our region. No? It's a very important amount, and it's another question. How much is the fee charged to the U.S. exporter? This will increase the cost of the business?
Yeah, so that is a great question, and I didn't mention it. We have a specific fee calculator on our website for the guarantee fee that the U.S. exporter pays. That fee is based on the length of repayment. Obviously, a shorter repayment plan will be cheaper than a longer one, and then also the risk of the particular bank. So that is on our website. It's very transparent to access.
Perfect. We will share that information that is in the links that you put in the presentation.
Yeah, and I'll say it's generally a pretty low fee.
Another question here, in order to be in a real situation. For example, how the program works if a milling company in South America is negotiating with Cargill or Bulls. No? So as you explained, I don't know if you can go back and explain in detail how will be the process again. First, I have to get a contract with the exporter from the US and see that the exporter is considered by a USDA as an exporter. No? After that, they have to talk with the local bank.
Yes, and I will say with Cargill and Bunge in particular, they are very familiar with our program. So if you're working with them and you say, hey, I want to use, GSM-102, they should know exactly what you're talking about. But yeah, Miguel, like you were saying, when you work that contract at the beginning, just say, hey, like, let's use GSM-102. And I'm sure that they would agree to that. And then, of course, then you would have to work with an approved foreign bank to get the letter of credit to cover that transaction.
Perfecto. I don't know, Julián, if you are clear with, si estás claro, perdón, Julián, con la respuesta que nos han entregado.
Mr. Julián, is that clear to you?
If the importer will pay this credit in less than 18 months, no? And I know there is a benefit there because that is being negotiated with the local bank in order to get a better rate from them. And then the local bank can use the credit for the 18 months. Can you explain a little bit more in detail how it works?
Yeah, of course. So let's say the guarantee is for 18 months. Your foreign bank will probably want you to repay that sooner than the full 18 months they have. Maybe they want you to pay it in 6 months or something like that, so that they can use that money then to invest in other things before having to repay the US bank. But again, that's part of the negotiation process. You know that they have the full 18 months, so use that to your advantage. And if they say, hey, you know, if you don't like the terms they're giving to you, you can always try another bank in our program that might be willing to give you a more beneficial repayment time.
Quiero recordarles a los participantes que pueden escribir
I'd like
sus consultas.
to remind you that you can address questions in Spanish because we have simultaneous interpretation here. I can also assist you in translating that.
Obviamente sí se puede, digamos, pagar en menos de 18 meses.
Yes, we can pay in less than 18 months, but the idea is to use this longer period in the importer's favor and try and negotiate lower interest rates with the local bank, right? Because we know they use that money to invest and do anything else before they repay the foreign bank.
Perfect. I don't know if there is any other question.
I'm going to say, Jeff, did you have anything you would like to add to what we said here?
So I think, Collin, you covered it pretty well. The only thing I would add is that as we talk about those figures that were cited, that in fiscal year 2023, USDA allocated $3.2 billion in exposure, of which we still have roughly 1.9 billion available. I would just emphasize that's the amount of risk that USDA is willing to take on via its credit guarantees. There is not direct financing available via this program. So when we cite those dollar figures, it's important to keep in mind that those figures are the amount of risk that USDA is willing to take on. There is not direct financing via the program.
There's another question there. Thank you. Thank you, Jeff. There is another question that says, if contracts of US wheat for the last quarter of 2023 with Cargill of Bungie, this program applies at 100%?
So our program only covers 98% of the value. So never at 100%. If you close future contracts. Yeah, I think, Jeff, I'm going to have you weigh in here on this particular question. I'm not sure I understand. Yeah.
Sure. So as Collin mentioned, there must be a firm sales contract as a requirement for USDA to issue a credit guarantee. Additionally, there's going to be a window in which the commodities must ship. So that all is going to be done when the exporter fills out the application for the credit guarantee. So as long as the commodity ships within the window specified in the credit guarantee, that is fine. But the sale cannot be too far off into the future.
Okay, clear. Julián, espero que te haya quedado claro. Si no,
I hope
podemos,
the answer is clear, Julián.
Entonces, lo primero que había que hacer
So the first thing you have to do
mencionarle el interés
is to
al exportador en este
voice the exporter the interest of kicking off the process to apply for the GSM-102 program. So let's see if we have any other questions or comments by the audience. Anyhow, I'd like to mention that the American Buyers Conference that we're going to hold in August this year, we're going to have a presentation on the GSM-102. Anyhow, we are here at your disposal after this presentation to assist you in any issue you might have, any questions you might have. Please keep in mind the GSM-102 and South American or Latin American importers have taken advantage of a considerable amount which is covered by the GSM-102 program. Okay? Are there any further questions? In case we don't, I'd like to thank you, Collin and Jeff, so much for.
Very clear. We are going to share presentation with the participants in this webinar, and any other additional question that appears in the near future, we will contact you directly in order to have your guidance on this in any particular case. Okay. Thank you very much again. Muchas gracias a todos los participantes.
Thank you so much, all participants. Any additional information, you can contact me directly. I hope you can take advantage of this financial tool to buy U.S. wheat. Thank you so much. Enjoy the day.